welcome. Patriot Radio News Hour, Joe and Jason, live on this Monday. The war drums, I guess the war drums beating on Monday. No invasion yet. A lot of tough talk happening out there. We had a very crazy week last week. Jamie Dimon talking about liquidity issues in the debt markets. We had obviously the stuff that's going on in the Middle East. You still got war with Russia in Ukraine, but don't worry. Janet Yellen was out to let you know, hey, we can afford it all. We can afford it all. Just put it on the tab, right? Hey, no big deal. We'll pay for everything later. Well, let's face it. They're really never going to pay for anything. But this is why you always have to be your own central bank. You're the only one. Nobody's going to look after your money better than you, period. And I know a lot of people, a lot of you have no advisors, right? Maybe you have your 401k or an IRA. There's a lot of you out there that do. Hey, some of you out there, a lot of you, hey, I've done pretty well. I've saved my money. I've got a nice nest egg coming to me when I get ready to retire. And let me tell you right now, Janet Yellen says, don't worry, we can pay for it because, they're going to go after all of those nest eggs. But that's why we have our next guest with us. My son Joey is with us from Northwestern Mutual. He's the guy you talk to, especially, if you're maybe you're in your late 50s, heck, late 60s. Some of you, maybe you're in your 70s. You're working, you're getting ready to retire. Maybe you've retired. There's a lot more nastiness. The new retirement age, I think, and we'll get it from Joey, but when you get into your 70s, especially if you've done really well, the government wants their money. These forced distributions, and Joey's been dealing with a lot of people out there that all is that because they haven't set it up right. All of those forced distributions, Joey, they're just being added right to people's income, and Uncle Sam's sitting there taking the big chunk of this money.
Yeah, and it's a huge problem that we've been seeing marketing this area, and it's happening to people who are great savers. You've done a great job of saving into that 401k year over year for 20, 30 years, and people's accounts are anywhere from $500,000 to $10 million. But the government is going to ask for their paycheck, and we've touched on it already, the required minimum distributions. And for folks out there that, one, are retired or they're about to enter retirement, the biggest thing we see is people not distributing their wealth properly or in the most tax-efficient manner, and helping them find ways that when you do reach 72, we're not having to withdraw $100,000 from our account and then go up another tax bracket and give Uncle Sam even more of our money. Specifically those that have saved into their 401k account year over year. What do I do with the money? How do I transfer that to tax-free growth? Right? And helping people implement those strategies. The last thing we want to see in our 70s is paying a $100,000 tax bill to our government. And we're seeing that happen so many times. And our area of expertise is distributing wealth and doing that the most tax efficiently possible while also protecting your accounts and making sure we preserve that wealth. And there's so many people out there that have done a great job of saving, but they haven't gotten in place for how to distribute that wealth as they retire. And so many people get hit at the age of 72 with the required minimum distribution that they had no idea they had to pay for. And that required minimum distribution could be $100,000 that year, or maybe it's $200,000 depending on your account. We make sure that we plan for that we're not getting whacked by that huge tax bill. And we've been partnering up with so many people in that space that I really wanted to touch on it in today's show, as well as talking about life insurance with a long-term health care rider that, one, gets you the tax-free growth, and two, protects you from the biggest expense you're probably going to have in retirement, which could be medical bills, followed up by taxes. So we want to make sure with all the accounts you've accumulated and all the great job you're saving, you need to make sure you make that phone call so my team and I can help you distribute your wealth most tax efficiently, but also get you someone who you can trust and rely on to watch over your money and keep in contact with you and make sure we're doing things the right way and planning for what you're trying to achieve. So if we haven't sat down and talked yet, and you have these big accounts in 401ks, and you haven't gotten a plan to distribute your wealth, give me a call at my personal cell, which is 602-909-9048. Again, you can reach me at 602-909-9048. And if I miss your call, just leave me a voicemail or text message, and I'll get back to you as soon as I can.
You brought up a couple of things. Obviously, with the way the problems now in the liquidity markets of the U.S. debt markets, on top of huge federal deficits, right, on top of the fact they hired all of these IRS agents, a lot of people, me included, think the era of let's cut everybody's taxes is over, and we're getting ready to hit into a new era of let's figure out a way to tax people even more. But I want you to talk about, because a lot of people, well, my investor, my guy says that he's doing that for me, but a lot of times that isn't the case, and they can't do what you guys do over at Northwestern Mutual. We're going to talk about that when we return. 800-951-0592. Jason and Joe here on this Monday. We're talking with my son Joey from Northwestern Mutual. And before the break, because a lot of people, like you said, hey, you have done a great job. And maybe their financial advisor has done a great job. Hey, we put you in some great investments. You've done really well. But as they get to this age, so many people out there think that everybody's the same. Well, why would Joey be any different than my other financial guy? There's actually a huge difference when it comes to, especially when you're talking about getting close to retirement and not having to give Uncle Sam all of that money and get it added into your taxable income. Most of the financial planners, if not just about all of the financial planners out there, they can't offer the stuff that you guys do.
Yeah, they can't. They don't have as many tools in the toolbox as we do, and maybe they do or don't, but their tools in their toolbox do not perform like Northwestern Mutuals do. And I've just seen firsthand, just kind of working through and chatting with people entering into retirement that have other advisors, and they have great relationships with them. But there are things that they have never talked about with their clients, one being the tax side of everything. How do I distribute my wealth? But also looking at different areas of planning outside of the stock market to make sure you're completely diversified. And what we've done is we make sure that people aren't taking on too much risk as they enter retirement. That's the biggest thing we're seeing as a similar theme is instead of preparing to spend down dollars and preserve wealth, people are trying to chase money in the market when they don't need to. And especially as we talk about us giving all this money away, us going into more debt, taxes raising in the future, increasing tax rates. We need to make sure that we're not chasing gains anymore, but we're playing this game from a more tax perspective and looking at it through that lens. And I think a lot of advisors get comfortable with their clients, and instead of really truly moving things around and doing what's in their best interest, they just keep them as they are. Keep them as they are and say they're good, and then they think that they're never going to get a second perspective on things. And I urge everybody, if you've got a person, great, utilize them. there are things we do that maybe they don't do, or we're probably going to ask certain questions that probably they've never asked you, or talk about or present to you ideas that you may have not heard about before. Right? In these years of lower income, are you transitioning dollars from a traditional IRA to a Roth IRA? Right? Are we doing small things like that to make sure you're doing what's in your best situation there? And we like to do things that are all math-based. We run models and analysis and Monte Carlo simulations. Right? We're not throwing numbers out of thin air. We're doing everything by math. And at the end of the day, numbers do not lie.
Let me ask you this. I think because this is something that I think is probably pretty prevalent out there, is so many people for so long, it's been, well, as soon as things get bad, the Fed's going to print money, the government's going to print money, and it's going to be fine. So we don't need to change. Don't worry. 2022 stunk, but it's not going to get any worse than that, and they're going to print the money. Listen, the government's having trouble financing the debt. The Federal Reserve said, hey, we are not going to be printing money anymore. And a lot of people, I think, are going to be caught off guard because their advisors, well, they haven't seen this before, right? This is something over the last 20 years, 20, 30, really, go back probably 40 plus years. That's always been the answer. And it looks like this time the answer is going to be much different. And a lot of people aren't going to be prepared.
A lot of people won't be prepared. And I see people specifically in retirement, pre-retirement, taking on too much risk and not setting themselves up to preserve what they worked so hard to keep. The fact is last year was the worst bond and debt market in U.S. history, down 16%. That's the safe part of your portfolio that advisors expect to go up every 5% every year. And it just isn't happening right now, due to us being in different circumstances that we haven't seen before. But I'm happy to say that clients with us, they had a policy, a life insurance policy specifically growing at 5%, while everyone else's account was down 20%. We need to make sure that you're preserving your wealth, you're not taking unnecessary risks, you're setting yourself up to prevent from this increase in taxes that's going to happen to us when we are sending all this money away. It's you and I that are going to pay for it. So how do we find a way to give them a smaller slice of the pie there? But the biggest thing is just showing you where you're at today and letting you be comfortable in knowing your situation. And if we're not where we want to be, how do we get there? Or if we are where we want to be, how do we spend more money or retire earlier? And I think now is the absolute perfect time to be having these conversations as we navigate this new financial market that we're in today and get a plan in place before 2024 starts. People tell me all the time, God, it felt so good to have my finances in check before I started the new year. And you can start off strong and get that headache off of your mind knowing you've got a team of people working for you, and you've also partnered up with the strongest rated company in the United States.
Let me ask you one last thing here about all of this, because, this is how they tell us to save, right? You save it tax deferred. So the vast majority of people that have been putting money into 401ks and IRAs, they do it tax deferred, which means they haven't paid taxes on this income. And if they don't call, if they don't reach out to you when they get ready to retire, the tax man is coming for that. And a lot of people just, they forget. They're not aware. They're just, it just comes out of my paycheck, every 2 weeks. And I thought it was just being handled. The vast majority of people, it's all tax deferred, which means, hey, you're going to pay taxes on it later, but you guys have ways to help them not pay those taxes at all.
Yeah, we have ways and we have strategies that are saving people $50,000 a year or even more, depending on what it costs you to run your household every year. And it's just something that gets so overlooked because the whole time during your life, you just put part of your paycheck away into your 401k. And it was always on autopilot for you. And then by the time people hit 72, they are whacked with a tax bill that they had no idea they're going to have to pay. The people that work with us and that we service, we're educating them on that, and then we're getting things in place 10 years before it even happens. We're slowly moving those dollars out of tax deferral to tax-free. In that situation, and the way we do that is going to be different depending on the people we're talking to and what assets they already have or what they're exposed to. Right? None of our plans and what we do for people is the same. I'm not a check the box and outspits your financial plan. It truly is personally tailored to everyone we're talking to. And to be 100% straight up with everyone, I don't think there is a financial planning team that plans for wealth distribution better than my team and I. This is our field house, and this is what we excel in. I haven't met anyone who we haven't been able to help out. Whether you have $10 million or $500,000 in these accounts, we can help you out and introduce you to things you probably haven't heard of. Or if you have an advisor, assist you with things that they haven't assisted you on. We're not here to take over a relationship. We're here to add on to things and educate and help you take action so at the end of the day, you get to have the retirement you deserve to have after you're working your butt off for 30, 40 years.
Joey, give out your number. I know you got to go here. Tell everybody how they get a hold of you.
Yeah, just reach me at my personal cell phone, 602-909-9048. Again, that is 602-909-9048. Please reach out to me via phone call. If I do not answer, shoot me a text, and I'll get back to you as soon as I can. But always a pleasure hopping on here on Mondays. I really enjoy it, and I hope everyone has a fantastic rest of their week.
There you have it. That's my son Joey over at Northwestern Mutual. If you're in that category, you're getting close to retirement, make sure you reach out, especially if you got a bunch of money saved up. Hey, the name of the game, really simply, keep more of your money away from them. Think about how much more gold and silver you can buy if you don't have to give it to Uncle Sam. Think about how much more vacationing you can do. Maybe you want to help out, especially today, right? This is the new world. Right? You got to help out your son or your daughter with a down payment. You got to help out. Maybe it's the grandkids being able to afford to go to college. And the best way to be able to do that is to give less of that money to Uncle Sam. So make sure you reach out to Joey, 602-909-9048. Jason, we have had a crazy 3 weeks. I mean, gold in 3 weeks was down $150. And then sorry, it's live radio. You never know what you're going to hear. But what I was talking about is, big performances out of gold and silver, especially the last few days. Obviously, Friday, they're flat today. The Dow's up almost 400 points. Hey, let's face it. Janet Yellen came out and told everybody over the weekend, hey, don't worry. We can afford all kinds of wars. Why not? We can afford Ukraine. We can afford the Middle East. We can afford it all. But I think the biggest thing is maybe this is going to be another excuse to pause again. Right now, I think I'm leaning towards the Federal Reserve continuing to pause at their next meeting. We're a couple of weeks away. We got a lot of Fed talkers this week. It's going to be very interesting to see what they say. We're going to have retail sales. We're going to have some housing numbers we expect to be not very good at all. But at least for today, liquidity concerns, let's forget about that, Jason, and let's just focus in on, hey, we don't think the Fed has enough ammunition left to go out and raise rates. I think that's gonna really be the telling thing here. Does the Fed do they think that they truly don't have any more bullets left? In other words, they're not going to say it. Listen, Jay Powell's not going to come out this week and tell you, oh my gosh, we got liquidity problems in the debt markets and we're not going to raise rates. He's not going to say that. Instead, what is he going to say? He's going to say, well, you know, we're data dependent and we'll do what is necessary. But actually, I don't think they're going to do anything. Patriot Radio News Hour. We'll be back after the break. Eight 800-951-0592. Joe and Jason here on this Monday. A quick look in at the markets. The Dow is up 350. The S&P's up 50. The Nasdaq's up 157. The 10-year note 471. Crude oil is a little lower, down 35 cents. I got some crude news I'll give to you. Gold's down 5 at 19.22. Silver's down 5 cents, 22.85. This market update brought to you by our friends at YRefi, up to 10.25% in returns. You just heard Joey talk about a lot of people, and I get it. We're also fearful we don't have enough. We're not going to have enough. A lot of times, you know what? People do have enough, and they're just way too risky. And that's one of his big fears out there. This is where YRefi comes in. It's fixed. You get a fixed rate of return up to 10.25%. It really is a great way to not be correlated to the stock market. It's not correlated to the Fed. Maybe you've got too much money in your bank accounts, whatever it is. Check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or call them at 888 YRefi 24. And Jason, again, kind of one of these days where I think the market is at least happy that the ground invasion hasn't happened yet, and maybe some cooler heads will prevail. But on the other side of it, I think they're happy because I think they believe this is just another reason for the Fed to pause.
You know, I saw. Yep, I got a really bad echo, Jack. Really bad.
We can hear you well, though. We can hear you well.
I'll try to get this out. Okay, there we go. That's good. I was looking at some of the mainstream media as you and Joey were talking, and that just kind of makes sense because you kind of got to watch that stuff. It doesn't mean that it's something that you should really put a lot of stock in, but it just, you know, Israel-Gaza conflict threatens to reawaken U.S. inflation, investors say. So let's see. Let me get this straight. February of 2022, before the inflation comes in, a war starts, and the inflation's getting ready to go up again, and here comes the Israel war. So is this what we're going to be headed into? Make sure that when the inflation gets a little worse, start a war, point a finger. That's what it looks like, Joe.
Hey, we don't have to raise rates because it's the war's fault, right? We don't have to raise rates because, well, it doesn't matter because it's not our fault that we have to give billions of dollars to Israel now, or maybe crude oil spikes again. We'll see. You know what? One of the interesting things, and again, I don't know, but the Biden administration all of a sudden now is saying, hey, we're going to ease restrictions on Venezuelan oil. Is this a precursor to we're going to restrict Iran's oil, but don't worry, we're going to offset it with Venezuelan oil. Of course, Iran can produce a lot more than Venezuela, but it is interesting the timing again. Or is this just a cat and mouse game that we're using to pressure Iran? Probably all of the above.
Well, I think from the Fed standpoint, Joe, it might be opposite of what you said. It might be, hey, this is our excuse that we have to raise rates with this new inflation. That's what I'm thinking. Because think, raising rates will destroy everything.
Opposite, yeah. Yeah, it's going to be one of the, I think they're going to use it not to.
What if next CPI is 4.5 and then the next month is 5.5? What are they going to do, Joe? Don't they have to raise rates if the inflation goes back into?
You remember transitory? Look how high it was getting then, and they kept using that. I don't know, right? I'm just trying to, I'm torn because obvious. Think about the last number, the good number, the headline number was 3.7, right? Which is double almost. The core was 4.1. That's a little over double. And yet they didn't raise, and there's talk of not raising again. I think liquidity matters here. It's how fast, you know what, we'll get some indication in the next week or so. How fast is that reverse repo money draining out of these banks? I think that is going to be a big, to Jason's point, if it's not running out a lot, then they could raise again. But the path right now is it has been really falling very, very quickly. It's interesting what they're going to do because they can use the war as the excuse that, well, inflation was going to come down until the war started, till we had this second war. So we're going to wait and see. Or to Jason's point, how high is too high? If it gets back to 5, can you really not raise rates at 5? I think, Jason, this is kind of the unknown, right? I think this is something where there's going to be a lot of Fed talk this week. And then it's going to get real quiet leading up to the next meeting, and it's going to be very interesting to see how many of these Fed people are saying, well, rates, the 10-year note's at 4.7. Well, rates have gone up, so we don't have to raise because the rates have gone up anyway. I think that's the thing I'm going to look for. I think Jay Powell's going to continue to remain, hey, either way, whether we raise or not, we're not going to lower. I think that message will still play out.
Yeah, I guess I got echoes of some of these people talking about the hyperinflation to come, which it might take a while to get to hyperinflation. But I start thinking, that's one way to, hyperinflate your way out of the debt problem, out of this budget problem. That is one trick that can be played. And I'm just keep on thinking, it's like, well, how many little skirmishes can pop up so that they can give themselves the excuses to just raise rates a little bit, inflate their way through this mess, and crush everybody at the bottom, Joe. Crushing the middle class, crushing everybody. Because I think that's where we're at. We're at an economic reset. I don't think anybody that hears that term that understands economics hears that as a painless process. It's a painful process. So I do see a world in which we're printing money and raising rates and going into an inflative process that you can just blame the World War III on, or whatever they're going to call it, Joe.
Yeah, I think that's the thing. Now they've got something else to blame. How are they going to handle it remains to be seen. But again, I think it's very, very interesting that all of this timing of this whole thing, right when we're starting to have Jamie Dimon warn about liquidity, and all of a sudden the worst event we've seen in the Middle East in a very long, maybe ever, is happening right now. Patriot Radio News Hour will be back after the break. (800-951-0592). Joe and Jason, Patriot Radio News Hour, live on this Monday. Last week, I want to say it was the second highest volume Silver Eagle sales in company history. We had 1 week, and this was after the financial crisis. We had 1 week during that time where we had higher volume in Silver Eagles, but the second highest volume in Patriot history last week. It's already continued today. Every phone call today has been some form of silver eagles on top of gold. We've got cases of silver eagles on sale today at $14,995. If you want rolls of silver eagles, I've got those on sale today at $610. And Jason, this is something where I think for a lot of people, not only the potential of silver. I mean, think about this. Silver could double in price and still wouldn't be at its all-time high. I mean, gold's just off its all-time high. Gold goes up 10%. It's at an all-time high. You know, it's always right near it, right? You think about all the other commodities. You know, you think about crude oil, you think about copper. Wheat's been down lately, but wheat just was at an all-time high, last year? Soybeans, corn, you name it. All of these things, except silver, I think so. People love the fact that they know silver is very undervalued, heavily manipulated, heavily controlled by we know who. But now the stockpiles are being depleted. Volumes are picking back up here. Remember, the mint deliberately kept silver down by not producing. Remember when we had premiums, Silver Eagle premiums? I remember silver at $18. And we were selling Silver Eagles at $36. Because there was so few out there. Whatever that issue was, things have gotten a little better. The government, the mints of the world are definitely making more supply. But think about it. At $18, you're paying $720, $740 for a roll of silver. Now we're sitting here just under $23. I got them on sale for $610. But if you really want to save some money, if you buy a case, you're saving $255 if you buy a case. A case is 25 rolls. That's 500 Silver Eagles in the case. $610 for a roll of 20, or $14,995, Jason, for sealed cases of Silver Eagles today at 800-951-0592. And it's been really interesting. All of a sudden, a big push into the silver markets again.
Yeah, we got, I think in Arizona, but I know here in Colorado, we can get you a case turned around pretty quick. So you can get this picked up really fast. And on top of that, Joe, it's, if the competing green energy situation ever sours, I think you see a 5X rise in silver in just a couple of weeks. I remember watching rhodium, and I know rhodium's different situation, everything, but $700-800. Then it blasts over a couple of years up to $25,000. Of course, now it's down to about just under $5,000. But that's what silver can do. Because Joe, the only reason that it's the only commodity below its record highs as much as it is because of the pressure on it industrially and being used as a monetary metal. It's got a lot of pressure on it, and nobody wants it to be expensive right now, but why do I feel like the chains that are holding silver down are breaking here pretty soon? And a lot of silver owners are going to be feeling really intelligent when that happens.
Yeah, and it's something where we've been saying this for quite a while. When it's a question of when, not if. And the realities are we're much closer because of where the inventory levels, and I'm talking about inventory levels at the COMEX here in the U.S., inventory levels in London, right? These are the two major markets where, silver contracts, they're 1,000-ounce bars. By the way, I'm just going to tell people this. Don't buy those. They are the cheapest way to own silver, and it's not even close. And I will tell you right now, I can't tell you how many people have called me and said, Joe, I got a 1,000-ounce bar. What will you pay for it? And my answer is universally the same. Not interested. Not interested. You won't even give me a price? Nope. I won't even give you a price. But I'm just throwing that out because they are out there. They're impossible to get rid of. And the reason is 1,000 ounces, that thing's almost 100 pounds. Just shipping that thing is a fortune, right? And nobody wants them, but neither here nor there. I know it's kind of a weird thing, but these companies buy these 1,000-ounce bars, and then they melt them back down. They put them into these planchets, the disc, and then they ship them to these mints around the world for them to put their stamps on them, or they make them into silver rounds, or whatever it may be. But Jason, the big thing today is these inventory levels at these exchanges is at near record lows, which means any increase in demand could send the prices spiraling higher at any moment. And I think this is great because you're really paying regular premiums here. Great time to get in. $6.10 a roll, $14,995 for a case. Jason and I, we're coming right back. 800-951-0592. Cases of Silver Eagles, $14,995. Rolls of Silver Eagles, $610 at 800-951-0592. Silver's down 7 cents here, 21.82. And Jason, you know, I'm watching the Fed do what they've done in the past, which is we should be raising rates, but we're not going to, because they didn't raise rates last meeting. I don't know if they'll raise rates this meeting or not. Right now, I'm leaning towards no. We've got another excuse to allow for inflation to be hotter without the Fed doing anything, which is that war now in Israel, which, by the way, a headline breaking, I don't know if this is true or not, but the headline breaking that Israel is denying a ceasefire for humanitarian aid. Looks like, at least to me anyway, maybe this ground part of the thing is going to start up here in the next 24 hours. We'll watch that. But it's something where I think all of this is the path to a digital currency. This is all part of the plan. Whatever it is, whether the Fed's going to keep raising rates and cause a liquidity problem in the debt markets, they're going to enter into another hyperinflated cycle. I don't think it matters either way, right? We could have a liquidity problem or a hyperinflated problem. I think they'll lean towards the hyperinflated problem because they can blame other people for it. But the solution is going to be less freedoms, less banks, digital currencies. And I think that's another reason why we're seeing silver all of a sudden become really popular again. People want a way to barter around what they think is going to be coming in this digital currency.
Yeah, and I think there's going to be a tremendous amount of buying, Joe, that as situations get all stickier, you know, and people get a little more worried about what's the next thing, you know. And then here's the thing. There's going to be massive market stress in our near future somewhere later this year, early next year, middle of next year. And when people start to see asset prices dropping, people losing their jobs, businesses shuttering, Joe, it's going to be a different world than what we're in today, but it's what the world of the last bunch of years and decades have led us towards. And that's why you're supposed to have gold and silver sitting in savings all the time, because you're not going to be able to nobody really can time this stuff. You know, there's some decision makers, maybe they can make the timing, but that's not us, Joe, right? I don't live in the ivory towers.
I wish it was us, right? That would make things a little more tolerable. But as we're watching all of this here, it's something where I think a lot of people are getting smarter and smarter. They're seeing the writing on the wall. You've got to take care of your own finances. Just a record number of bank branches being closed in the United States. Every time I turn around, the number gets bigger. Already over 3,000 branches have been shut. This is a precursor. This is a message. Rite Aid filed bankruptcy protection today. And then I just saw LinkedIn says they're laying off 700 people. So a lot of things to look out for. Silver's a great place to be. 800-951-0592. Jason and I are coming right back with the half-empty cup and Steve Mitchell. Stay with us.